Hi, this is the Insurance Exam Queen, and we are learning about auto insurance today. So auto is a casualty policy. When we're taking our exams, we have property and casualty. Property is home, dwelling, CPP, BOP. Casualty is auto and CGL. Casualty is liability. So where property is about me and my stuff, my house, my clothes, casualty is I am liable to you, I hurt you. So car insurance is a casualty policy because the main thing that we care about on car insurance is if we crash into someone else and hurt someone else. Now, just like a homeowner's, with a homeowner's, you have section 1, which is property, and section 2 has liability. Auto also, it has liability and it also has property on it. Like if you crash your car, you have it. Both property and casualty have each other, is what I'm trying to say. A property policy has liability on it, and a casualty policy also has property on it, but it's what's the main thing. So like when you think of homeowners is a property policy, the main coverage is coverage A, walls and the roof. And the very last coverage is coverage E, liability on a homeowner's. Auto is flip-flopped. The very first coverage on an auto is liability for other people. And the very last coverage on an auto is for coverage for your own car if your own car is crashed and destroyed. So on an auto insurance policy, what do we need, or for the state exam, what do we need to know the most? One, you do need to remember all the parts of an auto policy. So there is part A, part B, part C, and part D. Okay, part A, part B, part C, part D. And you do want to remember all of the names. Part A is liability. That's the coverage to other people. So if I crash into you, I owe you money for your medical bills. So part A is going to be liability. This is to other people. Other people. It pays out to other people. I crash into you. I owe you money. My part A pays to you. Coverage A is for the people I hit. The people that I send to the hospital with my car. That is coverage A. Liability pays to other people. Now, when I buy liability, I can get it in 2 different ways. I can get a split limit, or I can get a combined single limit. We're going to talk more about this, but a split limit is something that looks like this: 25, 50, 25. You're breaking it up between bodily and property damage. That's what we cover under Part A, is the bodily injury to other people and the property damage to other people. Not only am I responsible for your medical bills, I'm responsible for the damage to your car. Both bodily injury and property damage I'm responsible for. And a split limit will split it up. You get this much for body and you get this much for property. And again, we'll talk more about that. A combined single limit says you'll get one single limit for everything. So instead of saying some of it is for body and some of it is for property, it just says you have this amount of money for the whole accident. Use it however you need it. So you can either do a split limit or combined single limit. And like I said, we'll talk more about that. Then you have Part B, and Part B is known as medical payments. Medical payments. Now, this is for you and your people. You and your people. Basically, you and your car. So if I hit you with my car, coverage A pays to you. Coverage A will pay to the other people. Coverage B will pay to me, because it is likely that if I crashed hard enough to hurt you, I probably hurt myself. So coverage B will be for me. So A is for you, B is for me, and it's for the people in my car. The key thing about medical payments that you must memorize is that it is per person. Per person. Whatever limit you have, for medical, they'll be like, you've got 5,000, 10,000, whatever it is. It is per person, and they will test you on that. They will give you a question that says you have $5,000 in medical payments. You hurt 3 people at 6,000 each. How many are you going to get? Well, you're going to get 5 plus 5 plus 5 for a total of 15. They're not going to say you have 5,000 per person medical. They're just going to say you have 5,000 medical, because what they're testing you on is that you remember that it is per person. So part B medical payments is you and your people, and it goes per person. All right, then you have parts, and that's for anybody getting in and out of your vehicle. So anybody getting in or out, like I've seen a test question where they say your grandma is coming towards your car, and as she's reaching for the door, she slips and falls on the ice and breaks her wrist. Does she have any coverage? Yes, she's got medical payments coverage, because trying to get into the car counts for medical payments. Then you have Part C, and Part C is known as uninsured or underinsured motorist. Uninsured or underinsured motorist. And they abbreviate this as UM and UIM. And this is for you. This is for you when the person who hit you, this is for you when the at-fault driver has no or little insurance. So Part C is when the at-fault driver, so someone else hit you, and they either have no insurance or little insurance. You're going to use UIM, and there's a couple of rules that we're going to talk about that with that one. The last one is Part D, which is damage to your auto. Damage to your auto. And you actually get, and that's to your auto. So this is the one that takes care of you. So this is actually property coverage. This is for your property, for your car. So if you crash your car and you need to get it fixed, you're using Part D. So Part D is for the damage to your auto. And that one comes under damage to your auto. You get collision, and you get other than collision. Collision is seen as hitting something. Other than collision is everything else. Mother Nature, earth movement, whatever. Collision is seen as you're at fault. Collision is if I hit something, it's collision. I hit a car, collision. I hit a tree, collision. I hit a guardrail, collision. The only time that you hitting something is not collision is when the thing that you hit is an animal. If you crash into a deer, they will actually cover that under other than collision. So other than collision is we like to say Mother Earth, as in like Mother Earth, or like natural disasters, weather. That's what we mean when we say like Mother Earth, like things you can't control, wind, hail, riot, other stuff that can happen to you or happen to the car. That's other than collision. And then hitting animals, hit an animal. It also includes flood. Don't forget that. We always talk about how flood is excluded on homeowners, but it is actually covered on auto. Because if a flood is coming, most cars drive away. So there's not a lot of flood claims necessarily for car insurance, so they're able to afford it. It doesn't wipe them out like homeowners would. So collision is when you hit something, generally you are seen as at fault when it comes to a collision. Where other than collision is like Mother Earth, Mother Nature, things that happen to you, even theft. If anyone steals your car or steals, your tires or your radio out of your car, that would be other than collision. Other than collision is usually, it's deemed as something that's out of your control. Collision is when you're in control, you're driving the car and you hit something. You were the one behind the wheel. You are the one who had control. Comprehensive is more like out of your control. It's more like happening to you. The wind is happening, the hail is happening, the fire is happening, the animals on the road are happening, theft is happening. So collision is more like I'm in control, which is why they deem it your fault. And then other than collision is something that's happening to you or happening to the car, and you're usually seen as not at fault with other than collision. Okay. One thing about theft also, by the way, is there is no theft for personal property. What I mean by that is if I have a laptop, if I have a book bag with a laptop in it, and it is stolen out of my car does not cover that. I would need renters or homeowners to cover that. So my car, when it covers theft, it's only talking about theft of the car itself. So theft of the car itself is what they mean there, no personal property. Very rarely will they cover things even like car seats. They really don't like to cover anything other than what is part of the car. So if a part of the car is stolen, that's cool. But if you have stuff in the car and that stuff is stolen, they don't like to cover that stuff. Okay. Yes. Okay. Now let's talk about the most important things about car insurance. One, definitely memorize all the parts. You need to know all the names. You should be able to say Part A, liability, Part B, medical, Part C, uninsured, underinsured, Part D, damage to your auto. That should just be boom, 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 boom. I memorize it, I memorize it, I memorize it. Okay. Now let's talk about Part A, split limit, because that is one of the biggest questions that they get you on with car insurance. So we're talking about split limit. Split limit. A split limit is when you have numbers like this. You've got 25. Oh, actually, let me do it like that. Yeah. Sorry. Got to keep my colors. We're going to do 25, 50, 25. Okay, I wanted to use these color codings. I chose these two as both purple, but you have a lighter purple and a darker purple. The reason why I wanted to keep them both purple is because they are both bodily injury. But this bodily injury is per person. This number, and it's not always 25, 50, 25. It can be a lot of things. It could be 15, 30, 10. It could be 50, 100, 25. These are just the amounts of money that is available. And every state picks the minimum for their state. So every state usually has a state minimum. They say you must carry at least this amount of insurance. And if you're not carrying at least this amount, you get in trouble. You have to, when you buy insurance in the state, it has to be a certain minimum. 25, 50, 25 is one of the common ones. But anyway, the first number of this split limit is saying that this number is saying you get $25,000 per person. That if I crash into you, if I cause harm to you in my car, the most amount of money I can give you is $25,000. Because that is my limit. It is 20. If I have 25, 50, 25, the very first number is telling me how much I'm allowed or how much my insurance will pay for one single person in that accident. So if I crash into you and you have $30,000 of medical bills, I can only give you 25. If you have 30,000 in medical bills, but my limit is 25, I can only give you 25 because that is my per person limit. The second number is also bodily injury, but this is total bodily injury for the accident. what this is saying is that I get, this is bodily injury per person, but in total, I only get 50. Basically, it's saying that I can hit 2 people, 25 each for a total of 50. That's how much space, that's how much coverage is available. Up to 2 people at 25 apiece. Now, it could be 3 people, 5 people, 10 people, doesn't matter how many people, but each person is limited to 25, and all of them together are limited to 50. This last number here is PD, known as property damage. Property damage. And that's the money to fix their car. Fix their car. So if I crash into you, I've got $25,000 per person in bodily injury, no more than 50 total for your bodily injury. And then I have $25,000 to fix your car. That's what this limit is saying. It could be 50, 100, 25, 100, 300, 100, whatever the numbers are, it doesn't matter. The first number is always per person. The second number is total bodily injury for the whole accident. And the last number is property damage to fix their car. Now, when they want you to know how to do this. So they're going to ask you questions on the exam. Well, actually, the way that they ask questions will be a little bit different, but I'm going to give you a for example that teaches you how to answer their questions. You won't see a question like this, but in order to answer the questions they do have, you kind of need to be able to do what I'm about to show you to be able to answer the questions they have. They're going to tell you, they're going to give you a scenario. They're going to tell you, you know, you have 25, 50, 25. And they're going to tell you that you hit, 4 people. Let's say we have dad, we have mom, we have brother, and we have sister. So you crashed into a minivan of a family, sent all of them to the hospital. Let's say dad is injured at $30,000. So these represent the injuries. Dad is injured at 35. Mom is injured at 20,000. Brother is injured at 10,000 and sister is injured at 5,000. She wore her seatbelt. Okay. So you hit this car of people, you hit this whole family, you sent them all to the hospital, and this is your limit. So now what we're going to do is we're going to go down the line and use our coverages to see what's going to pay out. When we look at dad is injured at 30,000, but the per person is 25. No one person can get more than 25. So dad can only get 25,000 because that is the limit. The per person limit, no one person can get more than that number. So since dad's injuries are at 30, he can get 25. Now we go to mom. Mom is injured at 20. That is below the per person. She's good. She's going to get her 20,000. Then we go to brother. Now, we have to remember, we only have 50 total. We only get 50 total. And at this point, we have spent 25 on dad. We have spent 20 on mom. That is a total of 45,000 so far, and I only get 50. That means that brother is only going to get $5,000. Even though his injuries are 10, all we have available is 5 because we've already spent 45 of the 50 that we have, which means sister is going to get $0 because there's no coverage left available. We have already spent it. Now, in the real world, they won't do the math like this. They won't pay off dad completely, then pay off mom, then pay off everyone will get a portion in equal to their injuries. Like even if you hit 7 people, they're all going to walk away with a little bit of money in proportion to their injuries up to your limits. But for the purposes of the exam, we want to do it like this so that we can make sure that we check the per person and the bodily injury. Because if we're not aware of that, we will answer the problems wrong, and you don't want to do that. Obviously, you want to pass. You want to answer the questions correctly. So, what was I saying? I had a total brain fart. You have to remember, so how are they going to show it up on the actual exam? What kind of questions will you actually see on the exam? They're going to say something like this. They're going to say, you injured. Oh, they're going to say your limit. So they're going to say you have 50, 100, 50, 125. Okay. You injured 3 people at 40,000 each. How much did the insurer pay? Okay, this will be like a question that you may see. They're going to tell you your amount of coverage. You have an auto policy with 50, 125. You injured 3 people at 40,000 each. How much did the insurer pay? Now, some people will go, oh, per person is 50. Each person is injured at 40, so all of them will get 40 because it's below the per person. And 40 times 3 is 120, so they're going to choose option A, 120 pays out. No, this is where they're tricking you at. This is the problem. The problem is that per person may be 50 and you may be at 40, but you're limited to 100. You cannot pay more than the total. So with this is where we would want it. This is why it's important to do our little, okay, 40, 40, 40. The first person will get 40, yes. The second person will get 40, yes. But at this point, I've spent 80. I only got 20 left for a total of 100,000, not 120. You have to double check not only the per person, right? You have to check that per person limit of 50,000 and then compare it to the total bodily injury. Otherwise, you're going to get the answer wrong. Okay. You have to go like person by person, making sure. All right. Now, also with split limit is, and this kind of goes back to our general insurance. There's certain numbers they want you to know about an auto policy. So an auto policy has one big number called the aggregate. I'm spelling that wrong. Aggregate, no, it is G. Aggregate. The aggregate is the policy maximum. The policy maximum, and it's usually like $1 million. So the aggregate is the total limit available on the whole policy. Basically, what the aggregate is saying is that if I use every bit of insurance, if I have all the accidents in the world and I have maxed every limit, every accident, that policy would have paid out $1 million. The aggregate is the max limit that you have. And if I have accidents beyond the aggregate, they won't be paid for because I've already hit the aggregate. The aggregate is the max that I can receive. So if I have more accidents than the aggregate that's available, they stop paying. There's no more money available if you use the aggregate. So the aggregate is the policy maximum. It's generally $1 million or a couple, and every policy has an aggregate. The aggregate is the ultimate maximum of the policy. That's the most that policy will ever pay out, is the aggregate. Now within the aggregate, you have your per occurrence. Well, let me not draw it so big. Within the aggregate, you have your per occurrence. Per occurrence. Your per occurrence is the maximum for each accident. Like if you think of your insurance policy as a Hershey's bar, and you get to break off the little squares. Your car insurance is like one Hershey bar, and for each accident, you get a little square. You get a little brick. So your car insurance is made up, like, think of the aggregate as like a big old bucket, a big bucket of $1 million. And every time you have a car accident, you're allowed to pull out a per occurrence limit, 25, 50, 25. And have another accident, 25, 50, 25. So you only have so many per occurrences available because your aggregate is limited to, the $1 million. But within the aggregate, just so you have the total policy limit, and then within that, you have a per accident limit, a per occurrence limit. And the per occurrence limit is just the maximum that is available for each accident. The phrase they use is sublimit of liability for each accident. That's the official phrase. So when we think of per occurrence being the maximum for each accident, the way that they title it is the sublimit of liability for each incident. The sublimit is coming from the aggregate. It's saying that if the aggregate is the ultimate limit, the per occurrence is a sublimit of that. It's a sublimit of that. Like if this so it's a piece of the Hershey bar. Like if the whole auto is an aggregate, it's the Hershey bar. One little square of it is how much you get for each accident. It's a sublimit of liability. The little Hershey square is a sublimit of the whole bar. A sublimit is a smaller piece of the whole thing. Okay. So the per occurrence is known as the sublimit of liability for each incident. Then within the per occurrence, you have the two limits. You have per person, you have bodily injury, and you have property damage. The per person is the max available for one person. And then you have bodily injury, which is the max available for all bodily injuries in one accident. And then the PD is the max available for all property damage in one accident. It's important to understand that each per occurrence is for each individual accident. And then each individual accident has a per person limit, a bodily injury limit, and a property damage limit. And they cannot be exceeded. If your accident costs more than what you've got, you're out of pocket, you could get sued for it, you got to pay the difference, which is why it's important to have a pretty decent size limit. So you have your overall aggregate, which is the policy maximum. Inside the aggregate, you have tiny accident minimums, your per occurrence. And then within the per occurrence, you've got per person, bodily injury, property damage. Okay. And each one of these represents, right? Like this, every single one has the, like if our numbers were 25, 50, 25, we're saying here you get 25, 50, 25, 25, 50, 25, 25, 50, 25. And you probably got a couple of more considering that you've got $1 million here. But that's what the aggregate is made out of. The aggregate is like one big bucket of money. And when you pull out money from the bucket, you're pulling it out as a per occurrence. And then within the per occurrence, you've got per person, bodily, and property. Okay. Any questions on the split limit and the meanings for all of the words? They do want you to know, what does it mean to be per person? That's the max available for each person. What does the total bodily injury mean? It means the max available for all bodily injury on the accident. What does the property damage mean? It's the max available for all property damage in one single accident. Okay. What is the aggregate? The aggregate is the total available on the policy. And definitely make sure that you remember that per occurrence is a sub-limit of liability for each incident. The per occurrence is the sub-limit of liability for each incident. Now, this is all referring to split limit, right? If you have a split limit, you've got per person, BI, and PD all split up. You could have a policy called combined single limit, and this one will be like, you've got $300,000 for the whole accident, and you could use it all for one person, all for bodily, all for property. They don't make you split it up. Now, insurers are more likely to have to pay the full. If you have a combined single limit and they're not allowed to say, well, only some is available for each person, only some is available for body, and only some is available for property, they're more likely to have to pay it out. So a combined single limit policy will be a little bit more expensive than a split limit policy, because they're more likely to have to pay out this full amount. Whereas over here, they get to cap people, they get to cap the limit by person, by bodily, by property. So they're less likely to pay out under a split limit policy. Okay. So medical payments doesn't require, so we just talked about liability right there. We talked about the split limit, the combined single limit. And it's not always 300,000, by the way, for combined single limit. That's just an example. Combined single limit could be any amount of money. Part B doesn't need a whole lot of conversation other than knowing it's medical payments. Oh, we do need to have a homeowners versus auto medical payments thing. So let's talk about medical payments. And we have home versus auto. On the homeowners, medical payments is for other people. On auto, medical payments is for you. And that's it, but everything else is the same. So what's the same between the two is that it's good for 3 years and you're not at fault. You're not admitting fault. And per person. So what's unique to home is that it pays out to other people. What's unique to auto is that it pays out to you, but everything else is the same between medical payments. It's good for up to 3 years. So like if you come over to my house, you fall down the stairs, you're going to the chiropractor, and you're going to the chiropractor every week for 3 years, that's what we mean by it's good for up to 3 years. You can be submitting claims on one injury for up to 3 years. I'm not admitting fault though. I'm not saying that it's my fault that you slipped and fell. And the payments are good per person. So each individual person can get whatever the limit is. One other thing about medical payments that I didn't mention in the homeowners class, and it's true for home and auto, is that the injured person, may need to submit to a medical exam, or if the insurer asks, they have to do a medical exam. So the injured person may be required to get documents. To do a medical exam, that would be better. Do a medical exam. What they mean by that is medical payments it's only meant for an actual medical bill. So there has to be an actual doctor saying you need this coverage, not coverage, but you need this taken care of because of your injuries. There has to be an actual bill. There's no pain and suffering on mental anguish. There must be a medical bill. And if you are claiming that you got hurt and you want money for that, the insurance company may say that you need to go and get a medical exam done to prove that you are indeed actually hurt. Okay, you have to prove that you are indeed actually hurt. Okay. All right, that's what we want to know for medical payments. Coverage C, uninsured, underinsured, is a little bit different than how coverage A paid out. So let's talk about UMUIM. So we have uninsured motorist and underinsured. Uninsured and underinsured. Come on, whiteboard. Uninsured is abbreviated as UM. Underinsured is abbreviated as UIM. And the M is for motorist. Okay. UM is no insurance. That is if you are hit by someone who doesn't have insurance. So there's no insurance under the uninsured UM. UIM says not enough insurance. So they have insurance, but it's not enough to cover your medical bills. That would be UIM, not enough insurance. UM, this one pays out the same way that we learned about split limit. It's going to be per person. If your injuries are 30 and it's 25, you're going to get 25. Nothing weird, nothing different. It pays exactly the way that we just learned with split limit. UIM, not so much. UIM is a little bit weird in how it pays out, kind of slightly unfair in a way. So let me explain what I mean. Let's say that we have Bob, and Bob is carrying part A at 25, 50, 25. And let's say that he crashes into Joe, and Joe is carrying part C at 25, 50, 25. Okay. So Bob is carrying part A, 25, 50, 25. He crashes into Joe. Joe has part C at 25, 50, 25 as well. And let's say that Joe's injuries from the accident are $50,000. So this is the injuries from the accident. Ouch, ouch, hit the car, accident. The injuries are $50,000. That's how much Joe's medical bills are. The first thing that's going to happen is they are going to take that per person limit. Because remember, even though Bob has 50 available, he can only pay 25 to each individual person. So Bob's policy is going to pay out $25,000 to Joe. Now, Joe is still going to have $25,000 that's left. So Joe looks at his insurance. So Joe is, he's in the hospital. He calls Bob's insurance, say, hey, Bob hit me, send me the money. So they will send him, the $25,000 because that's what it's available on the policy. And then Joe is saying, well, that's not enough. So he looks at his own insurance and he goes, oh, perfect. I have part C underinsured motorist at 25. I'm going to call my insurance company and get this bill paid off. So he calls his insurer and says, hey, I was in an accident. I got hit by Bob. My injuries are $50,000. Bob paid me out his max per person, which is 25. I have a remainder of 25,000 and I was hoping to use my coverage C, which is 25,000. They were like, well, Bob, or well, Joe, we're real sorry. Because whatever limit you have here, this 25,000 that you have available, before we can pay it out to you, we have to subtract what you got from Bob, which was 25. So since you have 25 and he gave you 25, there is no coverage left. Sorry, Joe, you can't use your underinsured. There's not enough money available. They make you on UIM, this is UIM only, they make you subtract what you got from your limit. And you can only get anything if there's anything left over. So if Joe had 5,100, they would subtract what he got from Bob and give him the remaining 25. If he just had a little bit more coverage, he would have been okay. But with UIM, for whatever reason, they make you subtract what you got from your limit, and then you can have what's left. You have to subtract what you got from your limit, and then you can have what is left. And in his case, he would get nothing. One of the reasons that insurance companies do that is because Part A, which is coverage for you, can be greater than or equal to Part C. What we're saying, Part A is to others, Part C is to you. And what the insurance companies are trying, or what they say, is that you cannot have more C than you have A. You can't carry more coverage for yourself than you would carry for someone else. Okay. So with that in mind, if you want to make sure that you don't end up like Joe, you're going to carry a high Part C. You're going to increase your Part C, but that will force you to also increase Part A, because you can't have more C than you have A. So if you go in and say, I really want to make sure that if people hit me, I have enough money, I want a really high C, huh? It's going to force you to get a high A, and then everyone is more insured. So maybe that's why they do it. I don't know. But you can never have more C than you have A. However much coverage you have for someone else, you can carry that for yourself, but you can't carry more for yourself than you carry for someone else. Okay, so that's a UIM example math problem. That's the tricky one. Again, they make you subtract what you got from the other person from your UIM limit, and then you can only have what is left over. Couple of other things about car insurance that we want to know is if you have a car and you attach a trailer to it, so this is a trailer, the coverages A, B, and C will apply to the trailer. So if the car has coverage A, if the car has coverage B, if the car has coverage C, all of those coverages would apply to the trailer without you having to add the trailer to your car insurance. As soon as you connect a trailer to your car, the trailer takes on coverages A, B, and C. The only one that it doesn't take on is D. D is damage to your auto, comprehensive and collision. If you want that for the trailer, you would need to add the trailer to the policy. But the trailer itself will automatically take A, B, and C. So this can be a weird test question, but they'll say your trailer popped off the car and crashed. Which coverages are available? Liability, medical, and uninsured motorist. Okay. We also want to remember towing and labor. Towing and labor. Fat marker. I don't know why it goes skinny. Towing and labor. This is something that I needed the other day. My car broke down in the middle of the Utah desert, and I, as the insurance exam queen, what a fail that this wasn't on my policy. I always have it, so I don't know what happened, that somehow I got it deleted. I'm not sure. But towing and labor, because your insurance company may have different limits, but the state exam will always go with $25 per breakdown. So if you have T&E, it's called, or towing and labor, you get $25 per breakdown. Another thing that you want to know is T&E, which is transportation expenses. transportation expenses. This one is saying, what if your car was destroyed in an accident or it was stolen? You can get transportation expenses that will help you pay for things like Lyft or Uber or bus tickets or, you know, something like that. You want to remember that you get $20 a day, $20 a day up to 600 max. $20 a day up to 600 max. However, they have a couple of rules. With T&E, there are two situations. Either there was an accident or the car is stolen. So two different things. Either you're in an accident or the car was stolen. If you are in an accident, you have to, this is a timeline. T&E says that if you are in an accident, you have to have a 24-hour waiting period. Meaning that this is the start date. This is the date that you had the accident. And you have to wait 24 hours before coverage kicks in. But once it kicks in, you're getting $20 a day, up to 600 max. Stolen says that you have to wait 48 hours before you can start collecting your $20 a day. Basically, there's little time deductibles for these coverages. Okay, there's time deductibles for these coverages. With an accident, the time deductible is 24 hours. After the first 24 hours, you can then get $20 a day until the car is fixed, up to 600 max. When it is stolen, you have to wait 48 hours, and then you will start getting $20 a day up to 600 max. So, how will they ask this on the exam? They will say, your car was in an accident 5 days ago. How much money have you collected under T&E coverage? So it's been 5 days since my car was in an accident. How much money have I collected under T&E? First thing I'm going to do is subtract a day, because for the first 24 hours, it's not covered. And then the rest of the days I get $20. So I'm going to go 20 plus 20 plus 20 plus 20, 20, 40, 60, 80. I will get $80 if my car was in an accident 5 days ago. Or they will say your car was stolen 7 days ago. How much T&E did you get? Well, I have to subtract 2 days. I have to subtract 48 hours, 2 days. So then I'm down to 5. And each day I can get 20, 40, 60, 80, 100. So you need to be prepared to subtract, if it's an accident, 24 hours, and if it's stolen, 48 hours. Okay. Okay. A couple of other things about cars. No racing. They don't like racing. If you are racing your car, not covered. They don't like anything with less than 4 wheels. Anything with less than 4 wheels is not covered on the auto. You would have to get a miscellaneous vehicle endorsement to cover anything with less than 4 wheels. Yeah. Okay. Trying to think of the most important stuff with auto. There is one other thing I want to share, and that is newly acquired vehicles. So on your auto insurance, just like your homeowners and your commercial policies, when you get another property or another house, your current policy will extend to it. Same with your car insurance. Your current car insurance will extend to any other vehicle that you get. And you need to know how it extends. But in order to do that, we need to know that there are two ways of, there's two kinds of like car insurance. There's there's either liability only, which is basically saying you have coverage A, or you can have what we call full coverage, which is having A and D. Liability only, you can have B and C, it doesn't matter. The focus is you're either only taking care of the other people, or you're taking care of the other people and your car. So full coverage is saying that you have not only liability, but you also have collision and other than collision. You will not see the phrase full coverage on the exam. They don't, that's a consumer term. We only say that when we're selling insurance or buying it. It's not an official insurance term. It's a consumer-based sales point to say that. But it is important to know. So I use that phrase to imply that this policy has A and D. It has liability and damage to your auto. Then there are two unique situations. You are either adding a car or you are replacing a car. Okay. Oh, I actually want to turn those backwards and make it a little bit easier. So you are either adding a car or replacing or adding. And what we're talking about right now is how does your coverage extend to a new car? So, and newly acquired, I don't mean new as in brand new. I'm saying new as in you didn't own it and now you do. You have a car that is new to you. The car doesn't have to be new. The car can be a beat up old junker clunker, but if it is new to you, it is a newly acquired car. And these be the rules of how that car will be covered automatically by the insurance that you have. Because think about, like, nowadays we have apps and we have cell phones and we can just immediately boop, 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 add my car to my insurance. But back in the day, before apps and cell phones and computers existed, you would have to go to your insurance agent's office and add your vehicle. Where there's going to be times where you may buy a car on a holiday weekend, or, you know, you buy it a late Friday night, the insurance office won't be open until Monday. You need to know that that vehicle will be covered so that you have enough time to go into your insurance agent's office. And this is why this exists. Now, in the real world, most insurance companies will give you 30 days. That if you have car insurance and you get another car, you will automatically have coverage on that car for 30 days before you have to call them and tell them about it. That is not true on the state exam. Delete that out of your mind. The state exam follows ISO, which is Insurance Services Office generic version of the policy. Insurance companies take the ISO generic version and then make it their own. And most insurers have made it so that you have 30 days of coverage for a newly acquired car. But the state exam is different. So we need to know the state exam numbers. And there's a difference between replacing and adding. If you have a liability only car, so you're taking basically a beat up old clunker and you are replacing it, there is no phone call needed. No phone call. You don't even have to tell them. And the newly acquired car will automatically be covered. There's no notification requirement. If I have a beat up clunker and I replace it with a beat up clunker, I don't even have to tell them. Don't even have to tell them. It's automatically fine. Now, if I am adding a car, the extra car will have liability for 14 days. So if I'm adding a car, the liability coverage will extend to that car for 14 days. The liability. So, and what we're saying is that within that 14 days, I need to call them and add it. Because on the 15th day of me owning that car, if I crash it, there's zero insurance because I've owned it for 15 days. They're saying you have 14 days to own the car and make the phone call to tell us that you have another car. And during those 14 days, if you get into an accident, we will cover the accident. But if you have not called us and told us about it by day 15, and on day 15, you get into an accident, zero coverage. Okay. The other cool thing, though, that you get, especially thinking of the fact that if I buy, let's say I have a beat up clunker and it's liability only, but I go to a dealership and buy a brand new fancy car on a holiday weekend, which needs collision and other than collision, I need full coverage on this brand new spanky clean car, but my insurance office isn't open until Tuesday because of the holiday. Will my liability only policy give me collision and other than collision on this brand new car? Yes, it will. For 4 days, I will have comp or I will have collision and other than collision. Other than collision and comprehensive is the same thing, but the state exam calls it other than collision instead of comprehensive. You probably know it as comprehensive, and that's why I always say comprehensive, collision, and comprehensive. But on the state exam, comprehensive is talked about as other than collision, just FYI. So you will also get 4 days of collision and other than collision. Basically, you get full days of full coverage. And that's to make up for the fact that if you do buy it on a late night, you won't see your insurance agent. You need to know that you have full coverage. You will have it. You have it for 4 days with a $500 deductible. Now, these 4 days are part of the 14. It's not 4 plus 14. It's for 14 days you have liability, and the first 4 you also get full coverage. With full, if you, and then, okay, so now we're moving down here. And by the way, how will a question show up for this liability 14 days, whatever? They will say you acquired a new car. You have a car with part A only. You acquired a new car. What coverage will you have? All of it. I'll have liability and full coverage. And I will have it for 4 days. So if they say you added a car to your liability only policy, what coverage applies? Collision. I get collision. I get other than collision. I automatically get it. You automatically get it for 4 days. Now, if you already have full coverage, when you're replacing, you get 14 days of full coverage. And if you're adding, you get 14 days of full coverage. So if you already got it, you already got it. The rule is, and what if you have a policy that has both? What if you have 2 cars? What if you have a car that's full coverage and a car that's liability only? So you have, and this is true in our family, we've got full coverage on our beautiful 2021 Nissan, and we've got liability only. What year is that, babe? Our clunker? 95. We have a 95 Chevy. We have liability only on the 95 Chevy, and we've got full coverage on the 2021 Nissan. And then let's say we add a third car. We're adding this third car on. What coverage will it have? It will automatically take the best for 14 days. So if I already have full coverage on at least one of my cars, even if I have 5 cars already, only one of them has full coverage. And then I add car number 6 will have full coverage. You take the broadest of what's available. This was actually a question in the Facebook group, the Insurance Exam Queen Study Facebook group. He said, I don't understand. It said 4 days of full coverage. I said, yeah, but you've already had full coverage on the policy. You're going to take the broadest of what's available. So if your policy already has full coverage, any car that you acquire will have the full coverage for the 14 days. And on the day 15, you have better have called them. Otherwise, it'll be canceled. Okay. So 4 days of full coverage on a liability only and 14 days of liability always. Okay. Any questions on this? Okay. All right. Any other auto questions? This is a great summary of auto stuff. Make sure you know the parts. Part A, liability. Part B, medical per person. Part C, uninsured, underinsured. Part D, damage to my auto. Make sure we remember split limit per occurrence, per person. Oh, Mexico. Rhonda brought up Mexico. Mexico, there's no coverage. No coverage in Mexico. Technically, if you're in a border state, if you're in Arizona or Texas, there may be a little bit of rule about it. But like some border states will cover you like 5 miles in. But generally speaking, on most insurance, there will be no coverage in Mexico. And you need to buy insurance. In fact, when you're in Arizona, when you're driving to Mexico, there will be insurance places that you can stop off to buy Mexico insurance because your regular insurance will not cover you. So Sam, just make sure you check your text to see if there's any border coverage. It's usually only like 5 miles in or something like that. But that brought up another point for out-of-state coverage. Out of state. Okay. Or different state. So like we said, every state gets to pick their own minimum. So Arizona, for instance, is 15, 30, 10. I think they may have updated it recently. So Sam, double check your numbers. But Arizona is actually pretty low. And then let's say that you have Texas, which is 30, 60, 30. What they're going to ask you is they're going to say, you have Arizona coverage at 15, 30, 10, and you drive to Texas. What coverage do you have? 50, 30, 10. They're going to say you have Arizona coverage at 15, 30, 10, and you drive into Texas and you crash. How much coverage do you have? 30, 60, 30. When you are going out of state and you're driving around, so I leave Arizona and I'm now driving in Texas. As I'm driving in Texas, I have 15, 30, 10, 15, 30, 10. Nothing about my insurance changes. I'm driving around Texas, 15, 30, 10, 15, 30, 10, 15, 30, 10. Then I crash. Ah! At that moment, my insurance will kick up to 30, 60, 30. The rule here is that when you're driving from one state to another and they have different minimums, you will get the best one. You'll get the best one. If you crash, you have to crash. This could be a tricky question they give you. They will ask you, the first example I give you, I said, you're in Arizona, you have 15, 30, 10, you drive into Texas, what will happen to your coverage? Nothing. Nothing will happen to it. That's the answer. Nothing will change. Your insurance does not change just because you're in the other state. But if you crash and the other state that you're in has better minimums, yours will shoot up to those state minimums. So basically the insurance companies say, as long as you carry your state minimum and you drive into another state, we will bump your coverage up if you crash. If you crash, you have to crash or it doesn't change. The whole time you're in 15, 30, 10 in Arizona, drive to Texas, 15, 30, 10, driving in Texas, 15, 30, 10, driving in Texas, 15, 30, 10, crash, 30, 60, 30. It'll bump up only after the crash. Okay. So I have seen questions like that. They say, you drive into the border of Texas, what happens? Nothing. Nothing changes. It's only if I crash. Now, what if I'm in Texas with 30, 60, 30, and I go into Arizona and I crash my car? How much coverage will I have? 30, 60, 30. You get to keep whichever one is better. So if you have a lower minimum than the new state, it will go up. But if your minimum is better than the state you go into, it will stay up. It won't go down. You get to keep whatever is better. So you get to keep whichever coverage is better, whether that is your state minimum or the new state minimum of the one you crashed in, because you have to crash first. You will get whichever one is better. Okay. All right. Any other questions for car insurance?
No.
Okay, perfect. All right, I'm going to end the recording for car insurance.